Hi guys, welcome to today's session. So as you can see, I'm in outer space, enjoying my isolation. Sigurado walang mahawa dito. Okay. Okay, so today, first up, we're gonna start, of course, with the macro picture. So you can see, we have reached the 1.2 million milestone. Okay. So I think this thing is still gaining momentum. Although we saw some good news coming out of Italy, I think the daily new cases are plateauing. And there seems to be some signs of stabilization in New York, which is, of course, the hardest hit in city in the US. Okay, but overall picture, I think this thing is still exponentially increasing. Okay, so last week, we saw Trump finally do a 180. No, finally, sineryoso niya. Diba? So like, as you can see here, March 9, this is just the flu. Okay, tapos April 1, he's estimating that the next 2 weeks is going to be very painful. They see up to 240,000 deaths in the US. Okay, so that's a lot. Okay, and I guess to give some perspective on how fast this is increasing, 4 months inabot mga 600,000 infections, and 1 week lang inabot to double to 1.2 million. So yeah, this is getting painful. Okay, so for comparison, for some perspective, 100,000 lives were lost in World War I and 400,000 in World War II. So parang gera to, okay? And last week then, we got the first glimpse of the enormous impact of this coronavirus. So US lost 9.9 million jobs in the past 2 weeks. 9.9 million jobs. Okay? So for comparison, 2015 up to this year, the US economy added 9.4 million jobs. So in 2 weeks, nawala lahat yun. Okay? Another data point, in the global financial crisis of 2008, 8.7 million jobs were lost. Okay? So economists see 20 million jobs lost by end of April, 12% unemployment. Okay? So sa Asia naman, I think Singapore is one of the first to release the first quarter GDP. Estimate naman ito. So they're showing a 2.2% contraction. Okay, so if you annualize this is 10.6% GDP decline. So it's the same as the global financial crisis of 2009. Okay, so obviously here visitor arrivals is down huge. Okay, okay, so sa Asia naman, this is from a recent World Bank report, came out this just April. Okay, so base case, you're gonna see growth more than half of last year down. Like yung buong Asia here, from 5.8 is gonna be 2.1. Okay, so yung bear case is a contraction almost everywhere. Okay, so Philippines, I think we're gonna see a big damage also. So here is from Joey Salceda estimating a loss of about 5 billion in OFW remittances, okay, out of 33.5 billion. So this is 10 to 20%. And 400,000 OFWs would be sent home out of 10 million. Okay, so another dilemma, of course, is that we have to process quarantine tests as many as 420,000 OFWs. Okay, so these are 420,000 chances para ikalat yung sakit. Okay, so we have to find a way to test all of them. Okay, so next part. Okay, so just analyzing how the different economies are battling this virus. So what I see in the US is that, so parang analogy is that they're supporting the war economy pretty well based on the ginawa ng Fed, but they're losing the war. Okay, it's because the health response is very, very bad and late. Okay, so this is a nice, not a nice tweet, but okay, but some information is that the coronavirus arrived in Korea and US at the same day. Okay, but Korea lost only 158 people. Okay, while Trump is forecasting 400,000 deaths in the US. Okay, so you can see gaano ka-importante yung healthcare response. Okay, so I found this article from Kenneth Rogoff. It's a very good book. This time it's different. It's a Harvard professor. So sabi niya, the economic response of Europe and US is quote unquote excellent. Okay? But the health response of US is 3 out of 10. Okay? So sabi niya, we took a long time to respond at every level. Now we have partial lockdown, where some states are having people shelter in place and some aren't. I don't even know what that means. Okay? So sabi niya, I don't see a concrete, consistent national response. Okay? So outside US, I think I posted this tweet a few days ago. Okay, so less tests, okay, less coronavirus. Okay, but it doesn't mean it's not there. It means hindi mo alam na dun sila. Okay, so on this part, well, the US is ramping up testing capacity. As of April 1, 374 out of 100,000. It's still not enough given gano'ng karami infections nila. Okay, so for contrast, ito medyo maliit, but you guys, I sent this PowerPoint to you guys, is that Iceland, for example, is 5,000 tests per 100,000. Okay? So going to us, our side of the world, Southeast Asia, Philippines, 4 tests per 100,000. India, same. Indonesia, 2 tests per 100,000. Okay? So I think this is a big problem, right? Kasi parang you're going into a war, but you don't have any data. Okay? So paano mo alam if you're winning the war? How do you know if you can ease the social distancing or lockdown, okay, when you don't have any data? Okay, okay, so okay, so okay, charting the market. So last week we said that everything was oversold. We're now seeing a rally. Okay, so I think the MACD is still showing a rally mode in market, no? So pero valuation wise, as sinulid dito is that I see a downside risk in the market. I think the worst case scenario is not priced in. Don't get me wrong, I don't know if it's going to happen. I'm just saying that the worst case scenario is not priced in. Okay, I'll show you guys later. Okay, technicals wise, last week we saw the market get sold off near this 20-day EMA, which also coincides with 0.382 Fibonacci retracement. Okay, so this is just the first level of resistance. Okay, so going forward, I think we're going to see the market consolidate here. Okay, so choppy action long short. Okay, so I think this is just for scalping. Okay, so if you want to do a short, I suggest you wait for the consolidation for the volatility to die down. For long naman, I think the ideal entry point is really a retest. Okay, so you want the market to retest the support level, retest, tapos ganyan. Diba? So if that doesn't happen, then we're just gonna have to take it lightly one by one na siguro. Okay. So for the global economy, I think this US dollar breaking out is I think it's dangerous. Okay. So analogy ko dito, it's really, well, I just borrowed this, that this is like a wrecking ball to the global economy. Okay. So the pinaka-importante dito is look at this number is that we have over $12 trillion of debt outside the US. Okay. So how are you going to pay that if the dollar appreciates so much? It becomes a lot more expensive to pay that. Okay. And what's also happening is that dollar income is collapsing. Okay. Kasi shut down lahat eh. Right? So all the exports are down. So ECB, you're making less dollar income, which means that it's getting harder to pay that $12 trillion in debt. Okay. So watch this. Let me take siya, UUP. So this is what I mean. $12 trillion in dollar debt. Okay. So this is more than double 10 years ago. Okay. So in terms of sectoral movements, so yung pinaka wasak, of course, is those that are heavily exposed to the physical economy, of course, like oil and gas, aerospace, yung mga Boeing, air travel, banks, financials, okay? So ideally, of course, you want to short the weak ones, but syempre, if it's oversold, you better wait, right? So I think the tech will be relatively okay in this environment. Okay, so I think it's good to find maybe alpha stocks in this high-tech sector. Okay, so In terms of the overall market, as I said, I think may downside this pa. So if you look at the flows, maliit pa lang yung outflows. Okay, so far it's 1% of AUM, right? So in previous bear markets, yung sell-off is really 3 to 7% of AUM. Okay, so corporate bonds is same, maliit pa lang yung outflows versus the historical levels. Okay, and I think this is very important. So if you've been following what's happening in the US the past 10 years, ang laki ng share buybacks. Okay, so actually the corporates are the biggest buyers of stocks, believe it or not. How do they buy back? They borrow money using the corporate bond market. Okay, so now that yung forecast ng Goldman Sachs is for a net loss in second quarter and 33% decline in EPS for 2020, may malaking chance tumigil tong share buybacks. So mawawala yung isang support ng market. Okay, so what I'm talking about, so from valuation perspective, so this is today, the market today, it's only pricing in a 5% decline in earnings. So based on this may table here, diba? So kaya sabi ko, there's downside risk. If ever you see things getting worse, okay, I think may malaking chance bumaba yung market. Okay, so if we follow Goldman Sachs, 33% down by earnings, then the market should be right here, like one said. Now, I'm not, of course, hindi tayo papabear dito. Just, I think we have to be aware of what's priced in, diba? What's priced into the market, ano yung possible scenarios, diba? As I said, how bad can this be? Kung alam ko lang, Boss Edward. Okay, I think there's a very wide range of potential outcomes, and these things are unique from a historical perspective. Okay, going back sa interview by Rogo, he said that you might say that this is a combination of the 1970s oil shock and the 2008 financial crisis. Okay, that's the depth of the demand shock. Okay, okay, so maybe myself from McKinsey, it's a nice report, very comprehensive. Just looking at different variables that you have to look at. Okay, so depending on kalalim, the length of disruption, and the shape of recovery. Hindi natin pag-usapan masyado ito. Okay, but I think the most important here is this one. Late payments, credit defaults. Okay, so that is what distinguishes if this is just a recession, okay, 1 quarter, 2 quarters, or depression, or 1 year, 2 years, 3 years. Okay, so the difference is that's crucial is the number of companies and people that are going to go to default. What's that? It's hindi makabayad ng utang. Meaning they have to close their company. Right? So, paano mag-bounce back na mabilis if that happens, right? Okay, so we have 9 scenarios here. So, the dalawang main variables is the health response, and the other one is the economic policy response. Okay, so I think that most developed markets are just umiikot lang dito sa 4 scenarios ito. Okay. Okay. I would say Philippines, too early to say, but so far, I'm leaning on broad failure of public health intervention. Let's see if things changes. And sa policy, monetary policy, parang for me, kulang pa. Okay. Okay, so bull case. Everything goes back to normal in 6 weeks. Okay. So lahat back to normal 6 weeks. We can go out. We can party. We can go to Japan. Okay. So this is the simulation of McKinsey. Okay. So sabi niya, in the fourth quarter to first quarter 2021, you're gonna see the economy start to bounce back. Okay. So mabawi na down. Okay. Bear case, unemployment goes to 20%. Everything does not go back to normal, at least a year or 2. In the meantime, there's a huge demand shock. Okay, the effect of lockdown is like a depression-like conditions. Okay, so I really pray that dito na nangyari, but I guess we just have to follow the signs. So, for example, Korea, Singapore, they started to lock down again. I mean, social distancing ulit. Diba? So it's really hard to relax kasi baka umakit ulit yung cases. Or like China recently, they locked down again at one of their counties. Okay, so I think this is a long battle. And if you relax, there's a really a risk of another spike in the cases. Okay, so parang matatagalan, di ba? So the bear case for me is this one. So parang magka-depression, matatagalan will recover. Okay, so as you can see here, 2021 second half until 2022. Okay, ayun now. So in sum, I think that what's priced in today is still the bullish scenario. Okay, but in the next few weeks, we're gonna see if this is more of a realistic scenario. Okay, thank you. So we have Team Chad. So Trixie, it's up to you now.
Okay, all right. Thanks, Jason. So today, Team Chad, that's me, Trixie, Miggoy, and Chad, we are going to talk about our trading approach to the COVID-19 epidemic. We're also going to touch on our outlook moving forward and some issues that we are looking at. Okay. So when the virus had spread globally back in Feb, there was a very palpable shift in market sentiment across the globe. I'm sure you guys could agree. And it was unclear where markets would be 2 months from now, let alone 6 months from now. So our team, we had to regroup, and I'll walk you through some of the steps we did as part of our regroup. First, we had to quickly assess our essentials before even thinking about trading. For instance, do we have enough provision for at least 6 months should things turn for the worse? Indirectly, this was also going to relate to asking the question, how much can we even risk during these difficult times? So, yun. And then because we were shifting to a work from home setting, part of our assessment was also figuring out the logistics that we needed in place for us to start trading. Okay. So the next thing that we did was to take a step back and immerse ourselves in information. For everyone in the team, this was our first time to trade in the midst of a global pandemic. So we had to review the historical data. We had to look at previous outbreaks and the impact that they had in global markets. Furthermore, we had to compare how coronavirus fared versus these other outbreaks. Is it much more worse, or is it a much more mild outbreak? And apart from that, we also had to be well updated on developing information. These would be the rise in cases, changes in policies, and updates from various businesses. We had to be constantly updated with those things. A big part of being updated is also qualifying our sources of information and detaching from excessive noise. For our team, Twitter became very beneficial to consolidate credible sources that we were following in one platform and receive information as real time as possible. Oh, wait, yung previous slide, sorry. Okay. All right, so yun, Twitter became very beneficial for us. Also, we would like to note dun sa segregate ng noise, for the local market, we find that this is particularly relevant. There are instances where the quality of information that is spread in various social channels can be not as credible or can be misleading. So this is something that you guys should also watch out for. Okay, next slide. Okay, so aside from understanding the situation, building and tweaking our scenario analysis, a good framework that we used was a scenario analysis done by Nuriel Rubini. We posted a link, it's in the slide. We posted the link in the slide of his scenario analysis for COVID-19. We recommend that you guys check it out. Rubini does a good job of establishing a base case scenario, which is the one that he expects most likely to happen, a bullish case, which is the one that exceeds your expectations, and a bearish case, which fares worse than your expectations. Okay. So as market participants, maybe we have an inclination, given our research, towards a specific case. But as we can see with even some of the trading experts that we follow, all of them are basically preparing for multiple scenarios. They know that they can't really rely on the case that they're expecting most likely to happen. And if the market does something that they don't expect, they are not going to be caught off guard. So this is something that we also had to adapt in our strategy. And as part of our scenario analysis, it was important that we were seeking perspectives outside of our own. So in particular, a point of view that doesn't necessarily agree with ours. Not only does it help us see our blind spots, we were also able to flesh out our ideas better when we were discussing with other people. So this was something that we did. Then yun, once we were happy with our scenario analysis and we concretely set our expectations, we moved on to defining our trading strategy for each scenario and our watch list building, which Miggoy will discuss.
All right, thank you, T. So moving on from the different market scenario analysis, the next step that our team took was to build a watch list. And why is a watch list important? It's important because when you build a watch list, it allows you to make a plan and stay focused on that plan. So there's a lot of things that happen now, and just as what Trixie said, there's a lot of noise as well. So building a watch list, it helps you stay clear on what you have to do, what you want to do, what you need to do and especially when there's rotation or when the different scenarios play out. You already have a plan and you can quickly adapt. And when building a watch list, we didn't want to start from scratch. So we sort of stole this framework from Aswath Damodaran. And I'm not going to pretend that I can teach this better than Aswath Damodaran or than Leonard, but it gives a framework with 4 different scenarios. And I'm just going to touch on those scenarios very briefly. So the first scenario, and you can see that these are split into 4. The scenarios on the left are based on the more optimistic scenarios, given that the speed of the market recovery will be sooner rather than later. And you have the lower risk scenario, which is your bargain basement, and your higher risk, which is your distressed equity. All right. And now moving on to the more pessimistic view, which means that the speed of recovery of the market will take much longer. Excuse me, much longer. You have the lesser risk approach, which is your safety at reasonable prices, and you have the greater risk approach, which is your change agents. All right. So this is crudely the framework that we based our preparations upon as a team. And so given the different market scenarios and given the different scenarios in the framework of Damodaran, how we approached preparing was we asked ourselves first, where will we find our multiple R trades? Meaning, where is risk reward the greatest? Where can we find that? And the portions of the market that we thought would be good to look at were, number 1, which companies stayed afloat amidst the crisis, amidst this COVID-19. And number 2, at the same time, which companies were merely collateral damage. So in the market, everything was sold off and there was a point of great irrationality, and people, especially bigger funds, they needed to liquidate for safety, to protect their capital, right, to reduce exposure. So these collateral damage companies were merely sort of collateral damage from that sell-off and not directly because they needed to sell it. Okay, now moving on to the Philippines. So this is the local index for the past 3 months. So this is the year to date. And the difference between the Philippines and the US is that there's much less liquidity. And Noriel Rubini talks about this a little bit, that liquidity really, or the absence of liquidity, can really cause large sell downs. And that's exactly what happened. And so given the lack of liquidity, we now came across a very unique situation for the Philippines, where everything is very cheap. Like everything is very, very cheap. And now at this point, especially at the 4,000 to 4,800 level, the question to ask was, which companies are cheap for a reason and which companies are just stupidly cheap? So which companies were good for buying at these prices and which companies were should have been avoided? And now later on, the the scenario starts to change now that there has been some semblance of a rally for the past few days in the Philippine market. And so now we begin to see that charts are starting to look much different than each other. And the stronger companies, the more resilient companies are starting to come out. And the laggards are starting to stay there. They're starting to lag. And so now we focus on which companies are the most resilient. And so this is the process that our team took in order to build this list. And now the next step, of course, is how do we execute these ideas? And so to answer that, I'll be giving it to Chad.
Thanks, Miggoy. So hello, everyone. Before I move on to our market expectations and the stocks that we're looking at, let me just give a little warning that these are our views. These picks came from our process, our framework. So execute at your own risk. Just make sure that you manage your risk well. Okay. So looking at the U.S. market, we're not as bearish as Jason. We think that as early as tonight, we will see a higher low in the market. If it fails, then at most an equal low in the next few days. Why is that? First and foremost, market breadth is better. Market breadth is just the percentage of gainers versus the total number of stocks in the market. So that's usually a sign of risk-taking. Second one, VIX is tapering off. So VIX is usually a gauge of fear. So from a high of 85, right now it's around 40 plus. So that means that people are less fearful in the market. And lastly, I think this is one of the biggest signs for us that we have reached a bottom. The market is rallying on extremely bad news, which means that they're already priced in. So the past, I think the past 2 weeks, we've seen like 3 million jobless claims and 6 million jobless claims. Then the market just ignored it and rallied. So for us, that's a big sign that we've reached a bottom, at least in the short term. So like I said, that's our view. And our initial target is the 50-day EMA or 2,750 to 2,800. Okay, next please. Am I lagging? Okay, so for our first pick, it's HAP or the cybersecurity ETF. So it presents all the most of the cybersecurity companies and listed in the US. So obviously, cases of hacking have been going up as everyone is forced to go virtual. So case in point, Zoom, what we're using now, right? So it's very vulnerable. They say there's a malware in here somewhere. So because of that, we expect spending on cybersecurity measures to remain resilient or even go up in the next few weeks. So looking at it from a technical point of view, we also see a higher low similar to the market, but a little stronger. And our entry point is around 34.5 to 35. And our initial target is a little bit above the 50-day EMA. Look at that near the gap at 38 and up to 39. Next. For next stock, it's Microsoft. So obviously, Microsoft is probably one of the biggest beneficiaries of the work from home measures that we're taking right now. It has MS Office, Skype, Teams, even OneDrive. So literally everything you need to survive at home, they have it, right? And we also expect LinkedIn usage to spike because of all those people looking for new jobs. And then looking at its balance sheet, it has a formidable balance sheet. It's cash rich, so it can really weather the storm and even, I don't know, maybe later on pick up some of those distressed assets in the market. And the last point, which is a little minor, but also in a way has an impact. Although Bill Gates has stepped down, his image still has a positive effect on Microsoft. And sometimes funds take that seriously. All right. So our view, again, is Microsoft will be stronger than the market. And the rally may even reach previous highs before stalling. Our entry point is 157, and our initial target is around 170 to 175. Next, for our last example for the US, so SC, that's C Limited. So this is the owner of the platforms Shopee and Garena, or Garena, I'm not sure. So Garena is a gaming platform. So both are big beneficiaries of the lockdowns as well. And SE also has the backing of Tencent, which is who is the biggest and largest tech company in Asia. We also think that online shopping and even gaming online may remain strong even after the pandemic. So technically, we think that we want it to consolidate first for a few days, then break the high. So that's around 44.2. That's our entry point. The national target will be around the previous high. Okay. Now moving on to the Philippines. Um, Again, in the Philippines, we're also not as bearish. Why is that? Number one, primarily because of GSIS and SSS providing strong support near the 5,000 level. And we've also seen corporate buybacks at its highest. I think in my 11 or 12 years in trading the Philippines, I've never seen corporate buybacks to be at the current level. So even the Ayalas have been buying back their stock. So that's really a rare occurrence. And then second, we think that the extension of the lockdown has already been priced in. And China is the clear template. And it took 3 months before they opened up their economy. If you look at the report in COL, they're pricing in 3 months of lockdown already. So we think that it's inevitable that the government will extend it, and we probably see a gap down, but that will be, for us, that's a chance to buy. However, we also see some overhangs in the market, the POGO shutdown and the slower OFW remittances. And those are, I think those are two factors that haven't been priced in yet. And that really troubles us. And that's probably the reason why property has been weak. So, I mean, time will only tell. Bottom line, we think that the whole market is in informed speculation phase, meaning the range of outcomes, Jason already mentioned this earlier, the range of outcomes is just so big. But that's an opportunity for us traders, especially to scalp. So our view for the Philippines, it will be similar to the US. It's a rising wedge. And our target will be around 50-day EMA, around 6,000. Moving on to our picks. Well, the first two, they already moved today. So we need to adjust Globe a bit. It's already close at 2,300. So that's the chart of Globe. So that it's stronger than expected. But we're not really surprised because telcos are really the biggest beneficiaries in this lockdown. We think that data usage will explode and cashless transactions will also be really significant given the lockdown. Okay, can you go back to the slides, please? So we think that now it will consolidate near 2,300 before going higher. So again, Globe is the leader in the telco sector. Last factor is the delay in the DITO rollout. I think that's also one bullish thing that we need to look at when we're looking at telcos. Next. So for PLDT, PLDT is very similar to Globe, but since it's catching up to Globe, who is the market leader, Tel had been cheap for the longest time, for the past 4 years. And we've also seen insider buying by James Go to be, well, he's been really aggressive the past year or so. In the past 2 weeks, we've also seen foreign buying ramp up. And this is just in line with what's happening globally. Because globally, all those telco companies and 5G companies have been benefiting from this lockdown. Okay, so also similar to Globe, higher data usage and cashless transactions, and the delay in DITO rollout. Our view for Tel, Tel didn't move much today, so we still stick to our base case of a consolidation between 1,100 and about 1,200 before entering that trade. So our initial target will be around the previous high of 1,300. Now for our last pick, it's AC Energy Philippines, soon to be AC Energy International. So that infusion by Ayala of the international business, that's not expected. That wasn't expected, and it was swapped or will be swapped at a premium of 2.97 pesos. So that's actually good for AC Philippines because they don't have to uh, issue more shares at a lower price. Also, last year we saw Fernando Zubel de Ayala buy back ASEF shares aggressively between 2.5 to 2.8. And they also just initiated a 1 billion corporate buyback. So those two things are very bullish for the stock and a clear sign that this company is really just super cheap for them. Also, the expected rights price will be at 2.37, and the next meeting, I think shareholders meeting around April 20 or April 21. So we expect that to be announced during that meeting. And lastly, ASEF or AC Energy International is under-owned by funds and foreigners. It's not listed in the MSCI or FTSE or even the PSEI, and that's just inevitable. And we'll see. And the only thing stopping it from going up probably is sentiment. But once we see risk on action moving forward, then we'll probably see this go up higher. Thus, it's not surprising that our view for this stock is it should break that medium-term downtrend, and our entry point will be around 2.1, with our initial target to be at 2.5 and then 2.8. So that's the last pick for us. Again, just to reiterate, guys, these are our views, our picks. So just please make sure to manage your risk well. And just to share, Boss shared this video by Ross Williams a few days ago. And one of the points hit us real hard that, yes, you should manage your risk, but the biggest risk of all is not taking a risk at all. Okay, so we've already done our mental prep. You've gone through Caylum, and now we're nearing a time to make money, at least in the short term. So just click the button and risk a bit. I mean, yeah. So that's it for us. Edmund, I think you have some parting words to say.
Well, nothing new from what we happened. But Miggoy, Chad, Trixie, thank you. I think that you guys did an excellent job. I think everything that you pointed out was spot on. We still think that this is still a rally mode in the markets. I don't think that has changed. We appreciate everything that you've given us. I agree with the hack, the Microsoft, and your US picks, plus your Philippines. I think it's very interesting. So I think these two sectors, both consumer staples, telco, will probably be the most defensive in this environment. Just to point out the difference na lang from what Jason was pointing out and what Chad was talking about. You guys have to make sure that when you're trading, you have to understand what type of expectations you're going to be putting into the stock market. So if you're looking at stuff from a very, very short term versus a longer term perspective, I think what Jason was trying to point out was that there's still so much uncertainty. There's still flashing red lights that are showing in terms of economic data. Okay. Towards Chad's point, I think what we're trying to say is that in the short term, most of these economic data that's going to come out in the next week or 2 weeks or even in the next month, most likely is priced in. And I do agree. I mean, you look at OFW, you're probably going to see a 10-20% drop. To some extent, the market already dropped 40% in year to date. So to some extent, it's already priced into the market. Okay. What we're trying to figure out next is to see whether things can still snowball from here. So we already have that irrational selling. The real question next is how long will this take? Okay. Now, our base viewpoint is that it's still going to be a U. It's going to be a long L towards a U. Well, that makes sense. Yeah. Anyway, I mean, so our point is that we're just thinking that it's just going to be a long time before economic data starts to recover. Okay. And during these times, as traders, we really view this as there's going to be so much volatility for us traders to scalp this market in the short term. Okay. Now, in this entire environment, we're still looking at a buy low, sell high, nothing different. And that's why if you look at what Chad was showing a while ago, Chad's team was showing a while ago, they're trying to provide you guys resistance points. And I think that's something you have to take into consideration also when it comes to your trading. Don't assume everything is going to go up in a straight line. Don't chase. Stick to your rules, stick to your bar. But nonetheless, like what the three in their team said, you have to take a risk because you're going to see a lot of opportunities, whether it's one by one in this type of environment. Anything else?
Yes, we have one question from an anonymous sender. We're just going to call him Chairman. His question to Chad is regarding ACEPH. Do you think that we should wait for the rights issue to finish first before going in?
I honestly think that they will try to push it above the rights price. So it's actually a short-term trading opportunity. So if you have a large fund like bosses, maybe it's prudent to wait for the rights offering to finish first before coming in. But if you're a retail trader or us, I mean, this is really a good opportunity for us to participate.
Okay, thank you. Just a couple other questions that I'm just going to run through this so that for everyone, so everyone can see it. Chairman says thank you. Okay, so how will the PSE index pan out compared to the rest of the emerging market and the US market under the recovery lens? Are you expecting foreign fund managers to drive the local bourse or more of the local fund managers? And this is coming from Galaxy. So as per Jason, he said that based on McKinsey, two variables that are important is the healthcare policy response and economic policy, which he thinks the Philippines is failing in both so far. So from Jan, he said, what key economic data in the next few weeks must we take note of that could affect the market outlook? So as per Jason, also he said going forward, markets are going to look for signs of how big the impact is. So corporate earnings, GDP, unemployment, and so on. From Mackie, will leverage or margin trading become more expensive given the credit crunch? As per Jason, yes. So brokers will require more margins.
It depends kasi on the volatility of the market. If the market's very volatile,
just to add to the question, I think we should also monitor closely of course it goes without saying the virus data, like how many are recovering, how many are dying, or how many new cases are coming out. I think April mentioned it in her online webinar that we need to see recoveries outpace new cases. Is that correct? And we're also looking for that sign, not just economic data, because economic data usually is delayed. So depends, but usually it's delayed. And I think the leading indicator right now is really the number of cases and the number of recoveries that we're looking at.
Okay. Last would probably, Edwin's last note is that emerging markets will be hit more than developed countries. So as to the Philippines versus the rest of the emerging markets, I think the Philippines is more resilient, but it will take a shorter term hit. Okay, so I think that's pretty much it. We were able to go through all the Q&As. Edmund?
No? Okay. Thanks, guys. Thank you, everybody.
Sure.
Good to see everybody.
Bye.
Thanks for joining, guys. We'll see you again next week. Bye. Thank you,
Bye.
Jason, Miggoy, Chad, Trixie. Thank you. Great job, guys.
Thank you. Thank you.
Bye.